G'day and welcome to this week's video. My name's Robert Gowdy and this week we're going to have a look at a business called Rhipe. RHP is the code on the Aussie exchange, and they provided a bit of an update from their annual general meeting last week. And what interests me, if we go to the slides now, that when that came out, it obviously got spanked pretty hard on the day by 11.6%. Now, prior to the trading during the day, they released the announcement. I was going through it and I thought, well, geez, things look pretty good. And I was very pleased and upbeat around the company's report, but yet the business was spanked by the market. So I was keen to sort of go through and have a look at what the update was and perhaps why the market has hit it so hard in one day. And it hasn't particularly recovered since either. So this is not so much a negative for the business. I think longer term the business is fantastic and I will personally continue to be a holder, but it's more about the impatience and the greed of the market and that lack of patience to wait for the long term for results to transpire and to flow through. So you can see here in the graph very substantial 1 day decrease of 11.6%, but we've got to look longer than just a 5-day graph to say, right, we're investing in this business for the next 5, 10 and 20 years. What might it look like, what area are they in, and how are they going? So these are things we're going to have a bit of a look at. So to the end of June, if we have a look at the 2019 figures, we can see net revenue was up by 36%, and obviously after-tax profit was up by 103%. Even further, you can see that cash has gone up by $2.8 million, and that's even after they've bought back their own shares of $2 million. They've paid $3 million worth of dividends, and they've also spent $3 million on acquisitions. So these are very positive figures, and you can see here that the dividends themselves have gone up by 100%. So this is to the end of June. There was a bit of an update, obviously what we've just seen, but you can see here these are the new figures that we've got, where the figures from the end of June, this is the amount of paid subscribers to Office 365, which is the Microsoft cloud product, has gone from 450,000 seats or licenses to 516,000 to the end of October. So that is 16,500 new licenses per month. That is fantastic growth rates. On the Azure side of it, which is cloud storage, for the first quarter, so 3 months, the annualized revenue has gone from 21 mil to nearly 28 million. These are fantastic figures, and figures that I personally, when I read them, got very excited about. So where did the market obviously become negative? Well, it may be around there's an extra 52 full-time employees globally across all their businesses, and you can see it's a very steep increase. 22 of those are in Philippines, where they have their call centers, a big jump locally in Australia, and there's also 15 new people in Japan. With the Japan business, this is brand new, and obviously that's going to cost money, and those 15 employees there are new employees, so a big jump of new employees, so that may have been seen as a negative. In addition to that, they are spending $3 million on their joint venture in Japan, so this is essentially getting a whole brand new business in Japan, one that Rhipe owns 80% of, and they're funding it through cash flows and operating profit. So they're saying that they're reaffirming their guidance, their profit for the year of $16 million, but after they spend $3 million on that on the Japan business, the operating profits then down to $13 million. So I think it's a combination of reinvesting in Japan, that the profit's going to be lower from 16 down to 13, and that we've got 52 extra full-time employees across the globe. Now, while the market has seen this as a negative in the very short term, personally I see it as a really positive long-term issue, that they are reinvesting, they are building this thing for growth, Japan is a very affluent, wealthy country with about 128 million people. Not all of them will need to use cloud products like Microsoft Office 365, but a lot will. So I think it's the share market, like always, it can be very short term and very greedy and very unforgiving. But I see this stuff as a positive rather than a negative. So check out Rhipe. Please understand this is not personal financial advice. You need to do your own research. This is general advice only. I'd recommend that you speak to a suitably qualified advisor that can give advice in direct equities before moving ahead with any purchase. Please read our general advice disclaimer at the end of the video. Thank you for listening. Please subscribe to the video or to the channel if you haven't already done so, and for those that have, thanks for sticking with us. We'll speak to you soon. Thanks for listening.